Travel expenses, according to the IRS. The Internal Revenue Service sets out their stated position with respect to travel expenses and their deductibility in IRS Publication 463. Although for purposes of this particular video, we are going to be focusing upon the broad term of travel expenses without going into the technical aspects as to how much can be deducted, etc. It should also be noted that IRS Publication 463 of itself, for which we are providing but a brief look at, is itself merely an introductory overview, with the specifics actually needing to be discerned from the United States Internal Revenue Code and court decisions, in particular those of the U.S. Tax Court and appellate decisions, typically in conjunction with seasoned tax professionals, to get down to the specifics. Nonetheless, from the standpoint of an average taxpayer, IRS Publication 463 is solid guidance with respect to travel expenses and their deductibility. Proceeding forward, the formative question is what exactly is a travel expense? And for that, the IRS states that for tax purposes, travel expenses are the ordinary and necessary expenses of traveling away from home for the taxpayer's business, profession, or job. The IRS proceeds to further clarify these two requisite components. First, an ordinary expense is one that is common and accepted in that particular taxpayer's trade or business. And second, a necessary expense is one that is helpful and appropriate for that particular taxpayer's business, with a further consideration being that an expense does not have to be required to be considered necessary. Now, prior to proceeding to certain examples of permissible travel expenses for tax deduction purposes, the IRS addresses two essential components. One, traveling away from home, and two, the taxpayer's tax home. With respect to traveling away from home, the IRS position is that this arises where A, the duties of the taxpayer require them to be away from the general area of their tax home substantially longer than an ordinary day's work, and B, the taxpayer needs to sleep or rest to meet the demands of their work while away from home. As for a taxpayer's tax home, the IRS position is that the taxpayer's tax home is their regular place of business or post of duty, regardless of where they maintain their family home, and includes the entire city or general area in which their business or work is located. Where the taxpayer does not have a regular or a main place of business because of the nature of their work, then their tax home may be the place where they regularly live. So what exactly are the more common travel expenses, and how does the IRS view the deductibility of those costs, to the extent that they meet the criteria such that we look at some of the key examples identified by the IRS, with us merely scraping the surface as to what permissible travel expenses constitute, with there being considerably more to address in most instances, including what is the impact of varying circumstances and what amount is actually deductible. Transportation involves travel by airplane, train, bus, or car between the taxpayer's home and their business destination, with distinct rules for waterborne travel. Taxi, commuter bus, and airport limousine. Fares for these and other types of transportation that takes the taxpayer between 1, the airport or station and their hotel, and 2, the hotel and the work location of their customers or clients, their business meeting place, or their temporary work location. Automotive operations and maintenance. Automotive costs arising from traveling away from the tax home of business. The taxpayer can deduct actual expenses or the standard mileage rate, as well as business-related tolls and parking. If the taxpayer rents a car while away from home on business, the taxpayer is limited to deducting only the business use portion of the expenses. Meals and lodging. the taxpayer's lodging and non-entertainment related meals, provided the business trip is overnight or long enough that they need to stop for sleep or rest to properly perform their duties. Telecommunications, business phone calls by the taxpayer while on the business trip. This includes business communication by fax machine or other communication devices. The IRS provides a wealth of other points of consideration with respect to travel expenses, including employees. The taxpayer can deduct the travel expenses of someone who goes with them if that person, 1, is their employee, 2, has a bona fide business purpose for the travel, and 3, would otherwise be allowed to deduct the travel expenses. Business associates. If a business associate travels with the taxpayer and meets the conditions, 2, has a bona fide business purpose for the travel, and 3, would otherwise be allowed to deduct the travel expenses, the taxpayer can deduct the travel expenses they have for that person. A business associate is someone with whom the taxpayer could reasonably expect to actively conduct business. A business associate can be a current or prospective customer, client, supplier, employee, agent, partner, or professional advisor. Bona fide business purpose. A bona fide business purpose exists if the taxpayer can prove a real business purpose for the individual's presence. Incidental services such as typing notes or assisting and entertaining customers aren't enough to make the expenses deductible. With respect to record keeping, it is the Internal Revenue Service's position that the taxpayer should keep adequate proof, an account book, diary log, statement of expense, trip sheets, or similar record. The taxpayer is also expected to keep such documentary evidence that, together with their record, will support each element of an expense. As we've indicated at the outset, this is but the briefest of overviews of travel expenses according to the Internal Revenue Service, with publication 463 being an essential starting point to the taxpayer's analysis of permissible travel expenses. Thank you.